Mr. Fatih Birol, the Director General of the International Energy Agency, welcome. And this has been a very interesting conference with a lot of discussions about the current state of energy in general, including oil and gas, and also the future. Let's talk about the current state and where the prices are today. What do you think? I mean, what do you think is driving them?
Yeah. I mean, today we have oil prices about $70, and when we look at the year 2018, in the next 12 months, we see more or less a balanced market. The global oil demand will increase about 1.3, 1.4 million barrels per day, but a lot of new oil production is coming from United States, from Brazil, from west of Africa, from Canada, and to put a lot of oil in the market. So as a result of that, we expect a balanced market in the next 12 months to come, unless we have some surprises.
And how do you think that will impact the prices?
I think the prices, without the surprises, geopolitical or a supply disruption type of surprises, we think the prices were more or less in line with what we have been experiencing in the last few months.
Mm-hmm. So you don't see any, I mean, do you see the current, there has been already a lot of talk that 70 is the top that the prices will reach. Do you agree with that?
It depends on what happens in the markets. If it is only the supply-demand current picture, I don't expect huge increase of the prices. But I can highlight two important potential surprises. One of them is Venezuela. Currently, the decline in the Venezuelan oil production in a very short period of time is the biggest decline in the history of oil since 30 years as an unplanned decline. It's huge. And this decline may well go further, and this is a major potential surprise. What will happen with Venezuela? Other surprise, and this is an upward surprise, an upbeat surprise from the United States. The $70 may be seen as a very good news in, for example, in Gulf, in the Middle East, but the $70 may well give an additional incentive to shale oil in the United States, so the U.S. oil production may grow higher than what we assume today. So on the supply side, therefore, I see two surprises, potential surprises, I should say. One, Venezuela may well be much lower than what we think today, and U.S. may well be significantly higher than what we think today. These are the two potential surprises I would highlight.
How do you see that impacting inventories? I mean, the energy ministers were talking in the last couple of days that there are 100 million barrels that need to be cleared off the market. Yeah. How do you see that moving?
If there are no geopolitical developments, if there are no supply disruptions, in a normal business as usual case, we expect there will be a withdrawal of the inventories. They will be less and less in the future, but still we will have significant amount of inventories because it was built for several years.
Let's talk about the future of oil now. I mean, there has been a lot of talk about 2040 as the year where oil will reach its peak. Do you agree with that? And what are the dynamics that will lead up to that anyway?
I mean, peak oil demand is one of the key topics discussed in this conference as well. Is there a peak oil in the 2020, 2030, or whenever? We do not believe that oil demand will peak sometime soon, because this peak oil discussion has started with in parallel to the electric cars discussion since 2014, and I believe this is not a very well-informed debate for the following reason. The oil demand growth today is not driven by cars. It is driven by trucks, by planes, by ships, and by petrochemical industry. Even if there was a big electrification of the cars in the next years to come, global oil demand will still grow because it is driven by trucks, by jets, by petrochemical industry and the others. And it is the reason why we believe oil demand growth may slow down, but it will still grow in the next years to come. And if you look at the numbers, last 4 years, we have seen that the oil demand increased, and more importantly, the share of oil in the total energy is also increased. So this is something that we need to understand.
You said something very interesting yesterday about the energy mix. About 81% of the energy mix is still hydrocarbons, and it has been the same for 30 years.
So we discussed, this meeting is called Sustainable Energy Week. Sustainability debate started in 1987 by the United Nations, made a report, and the main idea of sustainability was to reduce the share of fossil fuels. In 1987, today 2017, 30 years. Big technological changes, renewables, incentives, governments change, everything changed. And when this sustainability push started, 87, share of fossil fuels, coal plus oil plus gas, three of them, was 81%. After all these things changed, today, share of fossil fuels is still 81%. So, economic facts are stubborn. Therefore, we have to see what the challenges in front of us and what are the realities of life.
Yeah, great. Thank you very much, Mr. Fatih Birol, for your time. I appreciate it.
Thank you.